Hello and welcome to the Of Interest podcast. I'm Gareth Vaughan from interest.co.nz. With the new coalition government having taken office late last year on the cusp of Christmas and the summer holiday season, we've had to wait until this year to hear about its plans in some areas. One of those areas is Commerce and Consumer Affairs, where the National Party's Andrew Bailey is the new minister. He's our guest today. Hi Andrew, and welcome to the Of Interest podcast.
Yeah, it's lovely to be with you too.
Yeah, great to have you here. Look, after October's election, obviously the coalition formation took a bit of time, and you personally also had the Port Waikato by-election, which you successfully retained your seat. So it was obviously a busy period into Christmas, and now we've started to hear about what your plans are, which is why we've got you in here today. But also, in terms of that, I guess the coalition negotiations, you've had to come to agreement with two partners, with the ACT Party, with the New Zealand First Party, on what your priorities are in this portfolio in commerce and consumer affairs. So I'm just interested, firstly, to ask you about, how easy or challenging was this? And can you give us an outline of what the key priorities are that you've settled on for this portfolio?
Yes, well, obviously the coalition negotiations went on with three parties. The outcome of that is that with ACT, we've agreed that we are going to put a priority on fixing up the CCCFA. With New Zealand First, there's a priority around the grocery market and how we respond to that. And related to that is also the banking industry. It's been agreed that we will do a select committee investigation. And then all the national proposals that we put forward in the election were also part of that agreement, which we had obviously flagged CCCFA, but also a review of COFI. So that's a mixture of things that transfers all the commerce portfolio, which is exciting for me because there's lots to do.
Yeah, absolutely. Look, just in terms of your banking select committee inquiry that you mentioned, do you have a time frame yet for when that is? Because I guess just in the back of my mind, I'm thinking, well, the Commerce Commission's obviously doing its market study on personal banking services, and they've got their interim report due out in March.
Yeah.
So are you going to wait till after that, or are you in a hurry to get it going?
I am in a hurry, but I want to wait for the report from the Commerce Commission. Obviously, the Commission study was focused on retail banking, and you'll probably be aware that last year I was quite critical of that. The reason why I was critical is it's inconceivable to think that the only thing we need to worry about is lending for mortgage type, because that's most of the personal lending. Because for businesses, actually, most small business owners put up their house as security for a loan. And so to divorce those two, that was one area I was critical about. But I think there's other areas where we might contemplate doing a further inquiry.
Okay, so it's going to have a broader focus than what the Commerce Commission is looking at.
Well, I don't want to prejudge it because I want to see what the results have come up. But there's areas that you could look at, and I raised three possibilities prior to the election last year. One is, why have we seen outflows from the productive sector, like small businesses, farming, and property development, which is really important if you want to build houses in New Zealand. We've seen funding come out of that sector going into what I would term the unproductive sector, which is the mortgage market. That's an interesting thing because obviously it has a big impact on businesses in the productive sector. And then there are things around margin, then there's things around capital adequacy ratios that the Reserve Bank manages. Now, because what that means is that will help banks determine where they put their money and where they invest their money, whether they want to invest in more mortgages or whether they want to invest in supporting businesses. So those are areas I sort of talked about. I'm approaching it with an open mind. I want to see where they've got to with the retail, but I think inevitably there's be some other areas we want to cover. Yeah,
that sounds like you're going to be looking at bank capital requirements. So you'll be wanting to hear from the Reserve Bank.
Well, I don't want to prejudge it, but I'm just saying, that those are possibly areas we want to look at. I've obviously got to agree this with not only my own cabinet colleagues, but also with New Zealand First. So we'll be putting all of that into the mix, and ultimately we'll be working out what's best to try and work out how do we get a more effective banking sector and that supports particularly the productive sector of New Zealand economy.
Okay, so it sounds like it's going to be quite a significant inquiry, so we'll look forward to hearing more. Look, before the election, National was talking about repealing the Conduct of Financial Institutions Act, or COFI, which you mentioned, which obviously was introduced by Labor a couple of years ago, and with the idea of introducing a fair conduct principle through which financial institutions are required to treat customers fairly. But now, obviously, post-election, you've said recently in a speech you gave that you're not going to discard COFI, but you want to perform a targeted reform to ensure the good conduct obligations are proportionate and fit for purpose. Why the change of mind there?
Yeah, so I've sat down with a number of players in the period before Christmas and said to them, look, what would you like me to do, given that some parties, and particularly large institutions like some of the banks, are filing their COFI obligations now. They've actually started filing with the FMA. So I said to them, what do you want me to do? And then I was also very conscious about smaller entities because I've had lots of conversation with them over the past year. So where we landed was the large institutions said, look, we've spent a year preparing our report for the FMA and we've invested all that money. Let us go ahead and do that. So I've said, okay, for those entities that have done it, fabulous, and they've incurred a lot of money. These people have spent a huge amount of money doing these reports. But also the other side of it was, being true to what I was talking about, where we were going with the COFI reports, we were starting to go down the process, and this is one of the reasons why we opposed it at the time. It was a very procedurally based sort of reporting. What is your steps that you have to do, and you have to document them, all that sort of stuff. And what I was concerned about is I want to make sure that people have to do their reports, but it's got to be proportionate, it's got to be fit for their business. So what I've said to people, first of all, for those who haven't started on that journey, and there's a lot of entities that haven't because of the sheer costs of staring down the barrel at them, I've said to them, look, first thing we're going to do is we're going to say, you as the owner of the business, whatever it might be, a financial institution, you are the one responsible for preparing the report. It's not for the FMA to try and interpret what your business is and say whether your report's appropriate or not. You have to do it, and I do expect you to do it. So everyone will be required to do it. The second thing is I am going to ask FMA to provide guidance to those entities who haven't started the process. So there's much more clarity around it. A lot of people were saying to me, look, because we haven't got real clarity, we don't know whether we have to be overly conservative and write huge pages or whether we can just tailor it. So I'm going to ask the FMA to provide that guidance. So that's the second bit. And I think the whole thing around this is I want to make it proportionate. So to give an example, if you're a small entity and you've only got 50 clients, your policies will be quite different from a bank that's got 2 million clients. Now, the other thing I've said, there's 4 specific areas that every entity must report on and must have a policy around. The first one is, how do you engage with your customers? Second one is, how do you develop new policies that you sell, whether products or services, whatever? How do you know they're fit for purpose, meet legislative program requirements, etc.? Third one is, how do you manage your complaints, which is vitally important. So aspects in that you'd expect in the guidance. Does it have a degree of independence? What are your KPIs around responding to people? What are your procedures for people to interact with you, to lodge a complaint? And that sort of framework that I want to put in place. So there's actually 4 of those that I've been very clear about, and that's where all companies or financial institutions will have to report on. But it is proportionate, and it is ultimately for the directors of the companies concerned to work out what's important to them. But my main point I'd say to you is that we are concerned about making sure all financial institutions adopt and adhere to good conduct. It's not about diluting that concept at all. That's not what we're doing. What we're trying to do is stop the sort of this over-reporting that doesn't actually lead to better outcomes.
Okay. And you've also pledged to reform the Credit Contracts and Consumer Finance Act, or the CCCFA. Now, obviously, under the previous government, there were changes made and problems that emerged, and it was a big issue, and we heard a lot about it. So, I mean, this act, obviously, the initial aim of it is to protect the interests of consumers in connection with credit contracts. So I assume you must feel it's not serving consumers as well as it could. It's not serving its purpose as well as it could at the moment. So what are you hoping to achieve by reviewing it?
So first of all, I'd say to you, I was on the Finance and Expenditure Committee when these reforms were proposed. This is the legislative reforms to put more controls around high-cost lenders lending to vulnerable New Zealanders. I fully endorse that, as National did, and most of our coalition partners did as well, right? Everyone liked the concept of trying to put more controls around these high-cost lenders, preying on vulnerable New Zealanders. What was so disappointing in 2019, and the reason why I'm really angry about it, is that the minister then went away and worked up a whole lot of regulations that don't come before a select committee. He has the power to do that, and he did. And what has happened, I know there's been successive changes to it because it simply hasn't worked. And where the rubber's hit the road, if you talk to the Banking Association, they will tell you that even now between 5 and 7% of loans that would have otherwise have occurred to people in mortgages, house lending, is now not occurring as a result of CCCFA. So when you think about 450 billion of house loans, I think, across New Zealand, even 1% is a massive figure, right? And so these are people simply not getting it because the banks are now being overly conservative. But where it's really pernicious and horrible is here we are sitting in Auckland. If you go out to West Auckland, as an example, and someone's car breaks down and they need $600 to get the repair job to their car so they can get to work tomorrow, and they don't have a standing overdraft, where do people go and get it? Now, the second-tier lenders, officially known as non-deposit takers, but what I mean by that is the cooperatives, the credit societies.
Yeah, the non-bank deposit takers. Yeah.
They are now finding that the cost of trying to assess someone, the affordability test, means that, and I'll give you a specific example, someone in Te Awamutu, I mentioned, it's a good little provincial town, they said what would normally have taken them to process, say, a loan for $1,000 would have taken between 2 to 3 years prior to 2019 reforms. Now takes them 8 to 10 hours. That means rather than being able to offer a $1,000 loan or even a $500 loan, their minimum, I think, was $3,000. So all we've done, the very people we're seeking to protect, the vulnerable New Zealanders who find it difficult to get credit for stuff they really need, now can't get access to small personal loans and things like that. And that is what really I find really offensive about what's happened, the unintended consequence, but I think we should have been able to judge that. And so what I want to do is open it up so people can get lending. The balance is there are some people who should be able to get lending who are not currently getting it, but we still need to have in place proper controls around high-cost lenders preying on vulnerable New Zealanders. So it's the balance, where we get that balance.
Okay. And you're also proposing to move the monitoring of the CCCFA from the Commerce Commission to the Financial Markets Authority. What's the thinking behind that? I mean, how's that going to improve the way that the Act is overseen?
Yeah, so if we go right up a level, what I'm very concerned about is since the Simon Power reforms back in 2008 that led to the establishment of the FMA back in, I think, 2011, since then we have had a succession of ministers, commerce ministers, who I think have been advised, and people come along and said, well, why don't we just do this piece of legislation, Minister? And what we've ended up doing is layering up a whole lot of set of regulations around the financial services sector. It's now got to a stage where the architecture of the legislation is really unclear. And so and this was the first announcement. This is the high-level stuff, not the COFI and the Triple CFA. The high-level stuff I want to do and help the industry with is I want to get the architecture of financial legislation lined up in the right areas. So in terms of regulators, a lot of institutions say to me, look, I've got potentially 3 regulators I've got to go to. I've got a Reserve Bank, I've got a FMA, and in some cases I've got a Commerce Commission. So what I want to do is go back to what's called the Twin Peaks model, which is what was the original intent, by the way. So we want to have the Reserve Bank do the prudential requirements, which means like capital and all sorts of stuff, and be clear that that is their role. Their role is not getting into conduct, which somehow these occasions seem to stray into. What I want to do is make sure that the FMA is the conduct regulator in New Zealand. And for some reason, the government chose to put the Triple CFA provisions under ComCom. And so what I want to do is bring that across. So if I'm any financial institutions, if I have a prudential, I know I have to Reserve Bank, but all my conduct stuff sits with the FMA. So I want to give that clarity to it, and that's the reason why I'm proposing to move the Triple CFA function. The second level of strategic change is that under conduct, we've been talking about COFI, which is one of those requirements, but there's a whole stack of others. In many cases, some organisations have to get up to 5 licences. So they have to go to FMA and apply for 5 different licences. So what I've said as part of the COFI reforms, when that's all in place, and it's got to be in place by mid-next year, 2025, is I'm proposing to migrate to one conduct licence. You're either reputable or you're not, and give away all these multiple licenses. You have to compliance costs and all that sort of stuff, and give that clarity around. I get a prudential licence from the Reserve Bank, and I have one licence from the FMA.
So yeah, do you think? Obviously having this structure that you're talking about, the Twin Peaks structure, that will simplify things for financial institutions.
Yeah,
clearly. So you're hoping that will filter down to consumers and make, life easier or better for consumers as well, ultimately.
Well, I am customer focused, right? The customer, regulations, we can focus on regulations, and governments love doing that. But actually, I want to have a viable financial services sector. And, what we're doing, we're at risk when people say to me, and I used to chair a financial planning company years ago, right, before I went into Parliament. When I talk to some of those advisors now, they'll say to me, the regulation that's coming at us, I just can't be bothered. And so I want to put the framework in place that we can have a viable financial services sector that exhibits and conduct itself in a proper manner. So I'm not talking about compromising on that, but I want to give them clarity, and I want to reduce some of the overlaps and some of the just what's happened over the last 15 years or so, and give that clarity so people know where they're going. And then with the FMA, obviously we'll start at that level to make sure that we're getting the right outcomes at FMA level.
Okay. Another area that's been in the news a bit in the last couple of years is the buy now, pay later sector. Yeah. So under the previous government, they moved to bring the buy now, pay later sector into the Triple CFA, but with buy now, pay later loans exempt from affordability and suitability assessments. Instead, buy now, pay later service providers to complete comprehensive credit reporting when customers sign up or increase their credit limit. And these regulations, I believe, are due to take effect in September this year.
That's right.
Yeah, look, are you planning on making any changes to the oversight of buy now, pay later as it's proposed as you come into government?
Yeah, so I'm very aware of these new regulations coming into force in September, and I'll be watching those very carefully. Obviously, there's been a huge move towards buy now, pay later. So I think the stats are 50% of everyone under 30 has had some form of buy now, pay later. So it's an easy form of credit, and it means you get around a lot of the rules and regulations that perversely triple CFA. So I'm watching that very carefully because I want to make sure, and this is what part of the new regulations come in September, that the risk is not with the first buy now, pay later. The real risk is what we're finding is people taking on multiple buy now, pay later schemes. And the rules will ensure that there is more testing of credit worthiness. We want to have that as a viable option for people and for retailers to be able to offer. But we just want to make sure that people are not ending up using buy now, pay later for purposes that wasn't really anticipated. And, you've seen the recent announcement or reports about, cashing it in for groceries and things like that. That's a worry when we start to get to that stage.
Yeah. Okay. I spoke to you before the election about anti-money laundering. Now, National had a 100-point plan in the election campaign, and obviously one of the points in that plan was developing protocols to allow simplified verification to comply with anti-money laundering requirements. I didn't see this in the Coalition's 100-day plan, so I'm just wondering, is this still a high priority for you? Where's it sitting in terms of what you're wanting to do?
Oh, very much so. The AML actually sits under the Justice Minister, but there's a huge overlap between me in terms of businesses and also the commerce function. In fact, I was talking to the Minister about it yesterday. We do want to move to a better framework for AML because whether you're a bank, a real estate agent, whatever, it's just a huge, huge cost. So again, barriers to being able to do it. So the tension is that we've got to meet international obligations, but we make it really difficult. And particularly if you've got to trust in New Zealand, it's virtually impossible to do it. So that is a particular piece of work. I had a team working on it all of last year, coming up with some ideas about how we deal with it. So that we're in the process, and it's a matter of getting this underway, priorities that we've got at the moment. But it is an issue that I'm very concerned about. There is a customer data rights bill that I'm proposing to put in the House pretty soon. That's been prepared and pretty well ready to go. So when you look at AML, there's sort of three parts to it. It's customer identity, do you use technology to identify people? You have the customer data stuff, and then what are the protocols for sharing the data? So those are the three things that you actually need to ultimately to do AML, but ultimately also to do open banking.
Okay. You've also talked about wanting to rewrite the Companies Act. What is your thinking behind that? Why does it need to be rewritten?
Okay, so go about my big priority. I want to deal with getting the financial structure, the architecture of the financial regulations, which I talked about, COFI, Triple CFA, and trying to get that clarified. So that's the first big chunk of work I want to do because I want to set the industry up on a much clearer path where clear responsibilities and obligations. The second big thing I want to do is around the Companies Act, and basically what I want to do is simplify it, modernise it and digitise it. And the reason I want to do that is the Companies Act has not been substantially reviewed for 30 years. So small things, in terms of digitalisation, you cannot actually file some of your stuff with the Companies Office digitally. Well, that's an easy fix. So we're now in a digital age, it should be able to do it. So that's but there are much more substantive issues like the recent cases around corporate governance. There's Mainzeal case in particular, has made the issue around director liabilities really murky. And so that needs to be clarified because one of the big things I'm concerned about is that many people now do not want to become a director of companies. And I was a director of many companies before I became an MP. Would I like to be one now? Ooh, I don't know. I'd be touch and go. And so we do want people being prepared to take a risk. And the companies, if you go back to the fundamental principle of a company when it was formed, the concept was developed, it was around making sure that people could use a company structure. That veil has now been pierced in some ways, and I think we need to clarify that. So that's a very big piece of work. And then there are things like phoenixing of companies where People close down companies and don't leave debts behind and set up new companies. Another piece of, if I'm doing that company reform, that'd be another piece of that work that I've been working on.
Yeah, that's a long-standing issue, definitely. Yeah. Look, you've got a couple of other portfolios as well, and I'm certainly interested in asking a couple of questions about one of those today. So you're also Minister of Statistics and Minister of Small Business and Manufacturing. We'll leave the small business and manufacturing for another time, but statistics is a very interesting area, and obviously the statistics that Statistics New Zealand produces are used by a lot of people, including the Reserve Bank. Now, you'll be aware that obviously in the briefing that Statistics NZ provided to you as incoming minister, they talked about not having the funding available to update the Consumer Price Index basket to make it fully representative of the goods and services that New Zealand households are purchasing. And they're saying that this is running behind, they haven't updated it yet, and that it's currently unfunded to do this. Now, obviously, we're in a period of high inflation, and the Reserve Bank, as I noted, uses the CPI to target inflation. So, I'm just curious as to what's going on here. Is Statistics New Zealand, are they not prioritising this work? How much money do they need? Are they close to finding this or getting it done?
So what Stats New Zealand have done is they've actually now publishing monthly as opposed to 3 monthly defined CPI figures. So what they're doing now is publishing monthly figures that don't have the degree of confidence or statistical reliability as the 3 monthly figure, but provide a very useful indicator. And in fact, the reports we're now getting back from the banks and Reserve Bank and all those entities saying it's a really useful insight to them. So they have gone some way to doing that. And then we're looking at things like how do we measure groceries. So I'm asking them, could you make the grocery basket, which obviously all goes into these inflation figures, could you make that more representative of what an ordinary, if I can put that in inverted commas, household would buy? So some things like that we can do to make more confidence level, but the project to move to a monthly, for instance, CPI type arrangement is tens of millions, and it's not important. Actually, what I think they've done a really good interim step that the market's welcome. But I think just taking this up a level again, what I've said to Stats New Zealand, they in the main are really good at capturing data, and so that's fine as far as it goes. What I'm much more interested in, if you're in the military, what drives the military? It's the intelligence that you have, and that's where you put your forces or whatever, right? From an economic perspective, a New Zealand Inc. perspective, why aren't we thinking more strategically about the type of data that we need to drive productivity and profitable growth in our firms? Because when our businesses are much more successful, that's when we get money as a taxpayer to pay for new schools and all this sort of stuff. So what I'm doing, and I've been doing this with even my small business groups, saying what is the data that we should be giving to you that will drive your productivity and profitable growth. So I want to be much more strategic about data rather than saying, oh, it's great, we've got all this stuff. And a lot of it goes to academic use. I want to use it to power up the economy and be really focused on, and that means you have to actually go and ask your customers what they need and come back.
Yeah, but obviously you still want to see Stats NZ producing the CPI and doing the census and
absolutely.
all those things.
Yeah.
So, I guess you talked about the selected price indexes, which is that new monthly data they're producing, which I agree it's very useful to have. It's about 45% of the CPI items currently.
Yeah.
Would you like to see them do the full CPI monthly? Is that feasible? And just in terms of, I guess, updating what is actually being measured in the CPI, which they typically do every 3 years, they are running behind. Are you keen to see them actually get that all updated, and are you comfortable that they have the funding to do that?
Look, obviously it's a very important thing, but now you asked me about prioritisation within stats. So the biggest issue, and you would have seen it in the BIM that you referred to, briefing to incoming ministers, is that we've got issue around the census. So most people won't realise that the last census in 2023 cost $326 million. It's a lot of money. And so we've got to prepare what we're going to do for 2028. So if you ask me, the biggest priority right now is we want to have a good basis for getting this data that we need. Now, there's that BIM will refer to looking at other ways of doing it, not doing the big kahuna $326 million census. So at the moment, there's a lot of prioritisation going around that. The inflation data, that is a work stream, but I'm working with an organisation that's got these other priorities, and I'm also wanting to make sure that what we do drives economic growth in New Zealand, how we can power up those businesses. That's the big strategic intent. So, there's many projects. I've got a whopping great list from Stats New Zealand. So we're doing bits where we can, but that's the strategic intent. How do we use data strategically to actually really help the New Zealand economy, because that's what funds all the stuff that people want, like schools.
Yeah, you mentioned that the census, and was it 326 million for the
it's
last,
a lot of money,
last
isn't
year's
it?
one? And obviously 2018 census, I'm sure you'll recall there were quite a few problems
I know.
with that one. And obviously it's an environment where Stats NZ, along with other government departments, are being asked to reduce spending. I think they're in 7.5%. They're being asked to cut by this year. So with those big projects like census, etc., are you comfortable that Stats NZ is going to have the funding and resources to do what you want it to do?
Yeah, look, the Stats New Zealand will deliver at 7.5%. So, for instance, I can tell you one of the initiatives is that they've got very expensive office space in Wellington, and they've now sublet it to another government agency, half of it. They're doing the same in Christchurch. That's about a third of the savings already in just one hit. The chief statistician actually back in December looked at the executive structure of Stats, and I think he took out 28 jobs. So it's not people, and this is what people love to say, you're cutting it by 7.5%, you're going to kill off the most important programs. No, you're not. What we're looking at is what are the areas where we started going down the route where it's not delivering value, and so a couple of the programs we are discontinuing because literally it's not going in the direction we want to, and so it's not compromising the most important stuff. That as a minister, that if someone fronted up to me and said, I'm going to cut and we're not going to do census 2028, you can imagine what my response would be, right? So there's some vital stuff that we would never touch, right? But there is a heck of a lot of low-hanging fruit in the government where we can cut costs without compromising the strategic intent of those entities.
Okay, just finally on the census. So after the 2018 one, I think they almost doubled the number of field staff they used for 2023 and got, a broader response from people. So, I mean, how do you see them conducting the 2028 one? Do you think they need as many feet on the ground? And also, you talked about what you want the data to do and grow the economy, etc. So are you looking at potentially changing the way they go about it, the questions they ask, that type of thing?
Well, one is, do you run another huge census every 5 years? That's the first question. And if you read that briefing, there's a proposal that you don't run those big things again, because the governments all around the world are having the same issue, where if you front up to someone now and say, can you fill out this long form, most of them tell you to naff off. And that's the reason why there was a huge increase in the number of field staff. So, again, trying to be much smarter about it. Actually, if you think about government, how much information resides within government circles, whether it's IRD, whether it's ACC, whether it's your DHP, whatever, and that's accessing that type of data in a responsible way means that that's called admin data, administration data. So this is what people are slowly moving towards, and even the 2023 data that they're collating now relied heavily on drawing on general information across the government sector. Now, obviously, They've got to do it within privacy settings and all that sort of stuff. But that is the trend, and certainly the trend overseas, and we will have to look at it, that you may move towards more localised small surveys, targeted surveys, and then look to buttress that information using existing data sources that are potentially untapped at the moment.
Well, look, we will certainly look forward to hearing more from you on this in coming months. So that's Andrew Bailey, who is the Minister of Commerce and Consumer Affairs and Statistics. Thanks a lot for joining us today. It's been great to hear from you. And I'm Gareth Vaughan from interest.co.nz with another of our Of Interest podcasts.